Hey, this is Garrett Goggin with the Golden Portfolio. We're talking to you today from the Metals Investment Forum in Vancouver, British Columbia. It's been a great show. There's a lot of people here. There's a buzz in the air, and today I've got Jack Stoch from Globex Royalties joining me, and I just want to tell you that I started the Golden Portfolio last year because royalties are the best way to invest in gold. Their costs never rise. They're fixed costs. They have free exploration upside. They trade at extremely high operating cash flow, free cash flow multiple. And the smaller ones always get acquired. You know, over the years, we've seen about 10 or 15 acquisitions. And then I back tested, I made a royalty portfolio. I'm like, what if you just invested in a royalty since 2007? You'd be able to like 13,000%. Like this beats everything. And that's why I started the Golden Portfolio, to bring this to you. But today, CEO of Globex Mining, Jack Stoch, is joining us because when I first found this company, I couldn't believe it. It trades for 40 mil market cap. It's got $20 million of cash in the bank. So its enterprise value is only about $20 million. Jack runs his business very conservatively. I like him because he's cheap. He prefers that I call him shrewd, right? But they put cash in the bank every single quarter. They value basically all their assets at zero. They don't even carry them on the balance sheet. They have exposure to about 250 mines. They have about 100, royalties. Jack likes to think of the company that represents, it's the periodic table of all the elements. You've got gold, you've got silver, you've got talc, and tremendous, amounts of other minerals in your portfolio. So, Jack, talk to us about that. Thanks for joining us.
Okay, my pleasure. We're a bit of a different kind of company. We have over 254 projects, including 106 royalties. We have about half the periodic table plus specialty metals and minerals and industrial minerals. And the concept is to make money. We view the final product as money rather than the metal or whatever you're going to be producing. So it doesn't, we're not in love with anything. We have a lot of gold, like we have over 100 gold projects and assets. We have over 40 base metal things, but we also we make money, for example, aggregate, which is just rock used for road construction or mixed into cement. So anything that potentially can make money, we want to do because the money is the final product. We make money principally from options where we acquire. In the bad markets, we acquire properties cheaply. We do work to increase the knowledge of the property, increase the value. And then when the market shifts where companies want, for example, like recently, antimony. We had picked up antimony properties when nobody cared about them very cheaply. We're shortly next week actually be announcing a deal on an antimony project. So we upgraded the property. Now we're making money off of that. They pay us cash, they pay us shares, they have to do work, so the risk is transferred to the other company. They take the dilution, and if they're successful, we end up with a gross metal royalty of the production, either in cash or in kind. And if they don't complete, the property comes back to us 100%, with us having the advantage of the knowledge gained by their expenditures. And we do another deal. We have properties where for example, a gold property where we have sold it 7 times. Each time they've increased the resource, markets turned on them, metal prices changed, whatever. And we're still making money. The last deal we have now, we just got another $500,000 payment. The 20th of this month, we get another $300,000 in stock. And the total deal is 10 million cash over 4 years. 12 million shares, I think it's another 15 million in expenditure, and a 3.5% gross. So that's the kind of deal we do.
Who's that with?
That is with Emperor.
Oh, right, okay.
Emperors, they're carrying that forward. That's our Duquesne West project on the Porcupine Destor break.
Yeah.
So we have this huge, vast resource of assets, other people taking the risk, and by having other people taking the risk, and the fact that we make money, we don't have to go to the market and issue shares. So the company has been around since 1987, and we only have 56 million shares out. We've never done a rollback. It's unheard of in our business. And the reason I among the reasons, I should say, not the only reason, among the reasons we do that is I'm the largest shareholder, and I don't want to be diluted.
Yes.
So,
You own what, about 13%?
yeah.
Yeah,
about
okay.
13%.
Yeah, after being in the sector for 15 years, dilution is a cancer of the industry. It just some of the companies that continuously issue shares, the shares outstanding will go from 100 to 200, 300, and the share price will fall by 66%. And that's one of the first things that I look at when I evaluate company, other than the price chart, is I look at the shares outstanding. And when I can find a company that adds value like Globex does, and the shares outstanding hasn't changed, it's basically you get paid to wait, and you're not going to get diluted. A couple things. GMR. Most of the royalties do NSRs, net smelter royalties, right? You do GSRs. GMRs. Yeah.
Yeah, it's different. It's something actually we invented. The problem in the industry with net profits or net smelters is that you're dealing with people. And when money's on the table, people get stupid.
Yeah.
Okay? So I tried to find a way around that. So we've developed the GMR, gross metal royalty. So that means, for example, if there is 100 ounces of gold produced and we have a 3% GMR, as the gold comes out of the refinery puts 3% of the gold in our metals account, 97% in the other company's metal account. Now, in net smelter, they would be charged once the rock has left the property and going through the mill, and there's all the charges and so on against it, the 3% in a net smelter return would be reduced. You were not actually getting 3% of the metal. The way I've done it, the actual metal produced, we end up with 3% of it in cash or in kind. And the money the metal or the money never goes in the hands of the company. It's paid by the refinery or the smelter directly to us.
All right. Like the difference between a GMR and NSR, it's only a few percentage points between, right? From what they get, like they're getting 98% of the metal's value back from the refiner, right?
It depends. It depends on what the processing costs are, because it's not only the refiner, it's also the mill.
Yeah.
You got to pay the mill, you got to pay the transport, you got to pay the employees, the vending. There's a whole bunch of charges that can go against it in a net smelter return.
So would you say net smelter return is based off of revenue and the GMR is based off of ounces?
Correct.
Okay.
Right. With no deduction, people don't get to be stupid.
Yeah. You don't give them a chance.
Right. And the lawyers don't get involved.
Okay. Yeah, it makes it very simple.
Correct.
What do the majors say about GMRs? Do they fight you a little bit?
At first, when we first brought it out, people are going like, oh, no, what is this thing?
Right.
But after you explain it, and you explain that the lawyers are cut out, that there's no conflict, they all come on side.
Okay.
Like, we don't have any trouble now with the GMR.
Okay. Excellent. Yeah, it was just one little thing about, that I learned, about you from the GMRs, and you started the business, and it shows your, acumen and the way that you run the company in that way. Speak to me about the projects that you are most excited about. And I know there's a few. I want you to highlight a couple.
Which of my children do I love the most?
Well, you always got something hot.
Yeah. Well, I like for example, the Duquesne West that Emperor are working on. We started off when Emperor optioned that from us. It already had 853,000 ounces of gold outlined, and it's on the Porcupine-Destor Break, which is one of the most important gold localizing structures in the Abitibi of Quebec, Ontario. I like we have another property called on the Cadillac Break, which is the Wood Central Cadillac property, and we have a small zone called Ironwood. We just completed 19 holes on it, 18 of the holes hit. And it's a small deposit, but we're trying to outline it to see exactly what the average grade is going to be and what the size is going to be. We think the size will go up a bit, the grade will come down a bit, because we were drilling towards the edges. And now we're doing the 3D modeling, and we're going to see if it can be mined by us, because it's really simple project, comes right to sub-outcrop. So I'm kind of in love with that particular project. We have near Timmins, Ontario, we have a talc magnesite project. I've probably spent more money on that one over the years than others. It's specialty industrial minerals, talc, high brightness talc for the plastics industry. Almost all of that quality of material comes from China, and there's no North American supply at that brightness that we have. There are other producers. Now, dark colored talc is used in rubber tires and so on, but the high quality, the white stuff is used in the plastics industry. So we have that. It comes off simply by flotation. And then the rest of the rock is magnesite. And magnesite, you can make magnesium metal, or, a wallboard in your house, that's made with gypsum. Now, gypsum is great, except that it absorbs water. So you can get black mold growing on it in bathrooms and basements
Very
and so
common
on.
in Florida.
Yeah. Well, if you make it with magnesite, magnesite doesn't absorb water, so you don't get black mold. It's also fireproof and it's more rigid. So it's a tremendous product for making wallboard. So that's something that we've been looking at with that. And also, that's to make you make magnesium oxide for that. So, and you can make the metal. So we've got this project. We've outlined. It's open pittable. About 34 million tons outlined, but it's open in every direction, and it's probably 200 to 300 million tons open pittable. 13 kilometers south of Timmins, Ontario, which is a mining town. And the cool thing about it, because of the grade, 85% of the rock is ore. So half of it talc, half of it magnesite. So you don't have to mine big tonnages to create a lot of material. So we did some studies based upon 500,000 tons a year. I mean, the thing's going to go on for hundreds of years if we can get it financed.
Who's your partner with that?
No partner. We own it 100%.
Oh, wow.
Yeah.
And it's not being mined right now, right?
No. We've done all the metallurgical work. We've made plastics with it.
Okay.
We've showed the quality of the stuff we can do.
Oh, wow.
We've looked at making the wallboard and so on. It's a lovely product.
Have you done an economic report on it yet?
Yes, we have internally.
What does the NAV show on that?
I'd rather not publish that yet. It's very good.
What
It's
does
very
talc?
good.
What does talc sell for as far as tonnage?
It varies completely depending on the brightness, and the price is always changing according to the sources. We're figuring, and we'll see if we're right or not, that you saw that China has cut off the export of rare earths, cut off antimony, and so on. So I expect that they're going to cut off talc also, so the price should go up higher.
Oh my God.
We'll see. I don't know for sure. That's just a speculation on my part.
Do you would it be would the mill resemble like a gold processing mill, the talc mill?
To a certain degree, yeah. Actually, we were in discussions with a company that had a gold mill, and we wanted them to switch over the mill to, actually it was a nickel mill, then they made it a gold mill, and we wanted them to switch it over to process our material, but we couldn't convince them.
Okay.
Because very few people, the thing about industrial minerals, and we have a lot of industrial minerals, is it's market driven.
Yeah.
You have to develop the market and require specialized knowledge. It's not like we produce gold, you put gold on the market, somebody's going to buy it.
Yeah.
No problem.
Yeah.
Copper, same thing.
Yeah.
They're end users. You have to have the offtake agreements
Okay.
before you really get going. You have to, because you don't want to start producing and not be able to find a client.
Okay.
Right? So we're looking for somebody with that knowledge. Actually, we've hired a headhunter out of London to come up with someone who can take over the project, develop the markets, the offtake agreements, and then carry the project forward. We'll see.
Yeah. And then speaking about new developments to your team, Brian Christie, right?
Dave Christie.
Dave Christie.
Dave Christie,
You just brought
yeah.
Dave Christie.
Yeah.
That was a research analyst for which bank did he work for?
He worked for Bank of Nova Scotia, Toronto Dominion,
Okay.
Newcrest.
Okay.
He's also run public companies. He just recently sold his company Orford to Alamos.
Yeah. Okay.
And I mean, I'm getting older. I'm
Right.
77.
Right.
I'm in good health, but the question is, whatever happens if a shareholder gets pissed off and kills me?
Yeah.
So the company's in trouble, right?
Yeah.
So you should have somebody there to replace you. And Dave is really smart. He's a geologist.
Yeah.
He's an analyst.
Yeah.
He's worked for banks. He's traveled all over the world, visited all kinds of different deposits. So he's coming on now in a 6-month period to see if I can stand him and he can stand me.
Okay.
And if he learn what we're doing, because
Okay.
we're a different company. And at the end of 6 months, if we're both happy,
Right.
he'll become president, I'll become CEO, and we'll work together.
Okay.
Because with 254 projects, it's a big load,
Yeah.
and there's only so much you can do.
Yeah.
You know, so I need help to help me carry this forward,
Right.
and I needed to provide security for my shareholders going forward.
Yeah, okay. That makes perfect sense. And, with his network, of people and industry contacts, laid over, your huge portfolio of royalty assets, it's going to be some, potential opportunity for massive growth.
Yes, I mean, and
deals
he used to work for
everything.
Agnico Eagle, for example,
Yeah,
so he knows
okay.
the people at Agnico,
Okay.
and so on. He's got a really good networking potential for
He'll give me the
Globex.
nav for the Talc project. Right? But yeah, we were talking yesterday. He's like, what if you just did a nav of every single project that you own? What would Globex be worth?
Yeah.
And he's going to be working on that. I've done a couple, navs on a couple projects, and one that we haven't even talked about is Mount Sorcier, the big iron ore project.
Yep.
That's creeping forward a little bit, right?
Yes, Cerrado actually sold a gold project they have in Brazil.
Yeah.
And they came out and they said they're going to be doing the feasibility study.
Yeah.
And they want to take it to production.
Yeah.
So, and that we have a good royalty on that. Actually, we spun out a company called Chibougamau Independent
Yes.
Mines. Chibougamau Independent Mines have a 2% gross,
Yes.
which we gave them. And then we also have a 1% gross.
Yeah.
And then we sold the vanadium portion of the royalty to Electric Royalties.
Yeah.
And now we're the second largest shareholder of Electric Royalties.
Okay.
So
that
we've
too.
got like 11 million shares of Electric Royalties.
Okay.
So, we find different ways to create value. And we're looking at potentially, like, for example, we put together about a half a dozen silica projects. And we'd like to, and we've been doing some metallurgy on our Wise Township open pitable silica deposit. And we're looking at maybe forming a silica company and spinning it out as a dividend. We're looking at bundling, for example, 3 or 4 gold projects, spinning them out.
Yeah.
The problem is to find competent, honest management. Okay? It's not the projects. We've got the projects. We've got the value. It's to find the people who can carry it forward. And that the way I think to do that is to find the right people to march forward with them and concentrate in creating the value on the individual projects.
Okay. It sounds like an amazing opportunity, and we could probably talk for another 3 hours. But
At least.
about all the properties.
yeah.
But that's the beauty of royalties. They own 250 projects. It's just a matter of time before one of them gets lucky. Antimony price goes up. They got an antimony project. Talc goes up. They got a talc project. Lithium goes up. You just did a couple lithium deals, and gold's going higher. So whatever's hot, their portfolio covers it. And it is just like I said, it's just a matter of time before one of them hits pretty big and generate some tremendous free cash that'll drive the company forward and drive the share price higher. So,
No, our model is a bit different in that when markets are bad,
yep,
companies go to sleep
Yes.
or they shut down. When markets are bad, we become very active in acquisitions.
Yes.
Because the price of things is dirt cheap.
Yep.
So we acquire them. And then we have a lead time in which we advance the projects to create an understanding of what the value is.
Okay.
And then when the markets turn good,
yeah,
people are looking for assets. So the
Right.
price of gold's going up.
Yep.
People contact us and say, "Have you got a good gold project?"
okay,
So then we make money by selling it. So like last year we made over $5 million. This year, at 2025, we expect to make over another $5 million.
Right.
So things are going along. We're making money.
yeah.
And the money we make, like we said, I think we told you later, we have about over $30 million in cash and shares
Yep.
in the company. No debt.
Yep.
We own real estate.
Yep.
We own all of our 254 projects.
Yep.
So we're sitting very, very nicely.
Yeah.
Not too much worry to worry about.
Right. It's going to be interesting to watch you guys over the next year. But we got to cut it. So thank you, Jack, for joining us today. It was great bringing your story to a wider audience here at the Metals Investment Forum.
My pleasure. Thank you for your interest.